Joining us this morning with his view, Richard Adkerson is president and CEO of Freeport-McMoRan Copper and Gold. He joins us along with our guest host this morning, Doug Goldie-Hellman of Caterpillar. Richard, you are at a metals conference in Barcelona, and I know there's a little bit of a satellite delay here, so I'll keep the question simple. Was last week's action in some of these commodities the beginning of something bigger? Are we at the front end of a bear market?
Good morning, Carl. It's great to be back, and hello, Doug.
Good morning, Richard.
What we're seeing right now is just we are. I don't think we're seeing the beginning of some bear market situation. China's taken some steps to respond to inflationary pressures, and that's had an impact. Today's commodity prices are jet fueled by movements of financial funds, and some of the effects in the oil markets have carried over to copper as well. But the long-term story for copper remains intact.
What set of drivers do we need to see then in order for the prices to continue going higher? I mean, we got some industrial output numbers out of China today that suggest it was a little softer than people thought. I mean, whether they tighten or whether their economy slows on its own, isn't it hard to build the case that some of these prices, especially for copper, are going to go much higher?
Well, you know, Joe, $4 a pound is a great price for copper. This year, our cost of producing copper will be about $1 a pound, and we'll sell 4 billion pounds of copper. So this is a very attractive price. China will continue to invest in its infrastructure for its country. Its internal economy continues to grow at a significant rate, even with this slowdown, and all of that will mean a demand for copper, and it's in the face of a relatively weak economy in the U.S. and the developed world. So our markets are good. I feel very comfortable with them.
Do you think, is China still does that lead the conversation? Should it lead the conversation, or is it more about Brazil, and is it more about India and some of the other markets that we talk about, but not to the degree we talk about China?
China today consumes between 35% and 40% of the world's copper. Now, Doug talked a few minutes ago about the desire for the rest of the developing world to have a better standard of living, and I think the long-term picture from a demand standpoint carries over from China into the rest of Asia, particularly India, into South America, Eastern Europe. All around the world today, people see the lives we're living and want to achieve that standard of living, and that requires significant development. And so that's why we're so positive about our markets, and at the same time, the supply situation continues to be a challenge for the industry.
Yeah, good morning, Richard, and great to see you again. I wanted to come back to a point you made just a minute ago, and that's the kind of the long-term outlook for copper. One thing we track is the reinvestment price and cost, and you mentioned that your cost is about $1, but we see a lot of up and down movement in copper and most of the commodity prices for that matter, but we're really focused on the long-term view here several years out. Would you comment on that and kind of see where you see that going down the road and what that could mean for us?
Well, Doug, as you know, the investments we make are very significant in terms of developing new mines and expansions of mines, and they result in production profiles that go out for decades. So clearly we have to take a longer range view. We're not a trading company. We don't hedge our commodities. So these short-term movements, which are important to some people, really are not the things that drive our decision makers. I'm going to be chairing a meeting of the International Council of Metals and Mining this afternoon, Doug, and a number of your major customers are here, and I can tell you we're all focused on what it will take to provide copper for a world that's going to be really short of it as we go forward. Makes it great for our business, makes it great for your business.
Well, it sure does, Richard, and that's the one thing we're concentrating on. We get a lot of questions, too, about short-term movements in all commodities, for that matter. But when you think about what the world is going to need, 7 billion people down the road, we think the pressure is only one way long-term, and that's really the investments we're making as well. And that echoes what you're saying, which I appreciate a lot, Richard. And also, you guys are pretty good and great customers of ours, and we thank you for that very much.
Well, we've got a great partnership. We've got major projects going on now from Indonesia to the Democratic Republic of Congo, Chile, Peru, and even in the United States, where we've got major expansion activities going on of where we expect to invest billions of dollars and hire thousands of people in 100-year-old mines. So this world that has emerged for copper and global growth over the past 8 years really gives us a lot of exciting opportunities, and that translates into need for a lot of your trucks and shovels and other equipment.
We are glad to hear that, and we're happy to be able to serve you, Richard. Thank you so much.
Hope it's a beautiful day there in Barcelona, Richard. Don't go running with the bulls. You got enough bullish action and copper going on as it is. Richard Adkerson with Freeport-McMoRan. Richard, thanks a lot.